Good afternoon, my name is Callanan and I'm here today to bring you through cash flow statements. And typically our cash flow statement has three headings. Our cash flow statement has three headings. The first heading we have in our cash flow statement is our cash from operating activities. Then we have our cash from our investing activities. And then lastly, we have our cash from financing activities. All of these will equal our increase or decrease in cash. All of these combined together, so we could have an increase in cash. Then we're going to compare that with the opening cash. That'll be in your opening statement of financial position. And then you'll have your closing cash, which again will be in your statement of financial position at the end of the year. A cash flow statement is a little bit like a bank statement. In a bank statement, we'll have an opening balance. In a bank statement, we'll have inflows of money, inflows of cash, and we'll have outflows of cash. And in our bank statement, we'll have our closing balance. So as you can see there, we have a cash flow statement, three major headings to remember: operating activities, investing activities, and financing activities. And when we summarize those three together, we get our increase or decrease in cash. We compare that with the opening cash, and then we have our closing cash balance. In an exam, I would always write out a pro forma cash flow statement. For example, I would always start with my profit figure before tax. That's the first figure I would write out. Then I would show non-cash items. Non-cash items, and the major one you come across is depreciation of plant and machinery. Also you'll come across in questions amortization of intangibles. Amortization of intangibles, similar in concept to depreciation. The intangible asset has a useful life, it wastes away over its useful life. Amortization of intangibles. Some other items that are always in these questions: there is finance cost. The finance cost in our income statement is not necessarily the amount of interest paid. We'll show a separate calculation for interest paid. And likewise, we have investment income included in our profit figure. The investment income included in our profit figure may not necessarily represent the amount of investment income received. In our pro forma cash flow statement, I would look at my movements in working capital. Movements in working capital, and we have increase or decrease in receivables. So we have here, let's say, increase receivables. We're going to have, in relation to our payables, an increase or decrease in payables. Essentially, we're going to be looking at our opening payables and our closing payables and seeing have they increased or decreased. And also, we would look at our inventory. We can combine these with our profit adjustments, and we come up with a figure called cash generated from operations. Cash generated from operations, and then we're going to show our interest paid and our tax paid. Now remember, this is just a pro forma. We're going to fill in this information based on the information in the question. We're also going to have our investing activities. Typically in our investing activities, we will have payments for property, plant and equipment. And I'll just abbreviate there, I'll put in PPE for property, plant and equipment. We may also have proceeds on disposal of plant In some question, there could be a purchase of investments. In relation to investing activities, we could put in here investment income received. That's investing activities. We're going to look at the idea of financing activities. And in financing activities, there may be an issue of shares. We may have a loan issue, or we could have a loan repaid. In financing activities, we could also put in our equity dividend paid. The last part of my pro forma will be my opening cash. And I'll introduce the idea of opening cash and what are called cash equivalents. Cash equivalents are highly liquid, short-term investments that are readily convertible into cash without any changes in value. So I have my opening cash and cash equivalents, and I have my closing cash and cash equivalents. Let's look at an old past paper question called Minster. And let's give you a moment to look at this question, and let's now get you to start filling in the information in the